Nvidia shares pulling back today. The AI market darling falling further from that record high that it reached not too long ago. Our next guest, though, isn't worried about the bumpy path that we have seen for Nvidia over the last several weeks. He's got a buy rating on the stock, the highest price target on the street. We want to bring in Hans Mosesmann. He is Rosenblatt Securities, a senior research analyst. It's great to have you here. So when you take a look at what has been certainly a volatile couple of weeks for Nvidia, some of that sell side pressure on the stock, why isn't that worrisome to you?
Well, we're entering new territory for Nvidia. The valuation really out of thin air almost over the past year. The move has been such that it has people kind of worried, like, how's that even possible? And it requires you to have an understanding of what's going on with AI and their leadership position. So it could be a little bumpy, but from a secular perspective, for the next 10 years, this is going to be the way to play AI. They're at another level. And I think people have to just get used to that. And they're not a semiconductor company anymore. They're a platform. They're all things AI.
And Hans, I'm assuming if you're bullish on Nvidia too, Hans, you must be also then bullish on just the bigger mega trend of AI that you must think, yes, it is this paradigm shift. And yes, Jensen Huang is right when he talks about, how the next industrial revolution has begun, Hans.
Yeah, that's right. So there are a couple of moving parts. And so the cloud, which is where most of Nvidia's business is not going to be the home of all things AI. As time goes on, more AI gets done, not up there in the cloud, but in the mid-edge, the far edge. And it opens up the door for more efficient solutions in terms of platform, hardware, and even software. So there are other players that will benefit from that transition, such as AMD, such as ARM, a little company called Lattice that we cover. So there's other participants, but in terms of the value capture of AI, NVIDIA may lose unit market share, but they may actually gain value because they're monetizing the entire stack. That's the entire rack, the entire software that goes around that. So it's a formidable model that I think people have yet to kind of fully grasp.
If you've been following Tesla's CEO, Elon Musk, you'd know that he's been hyping up the upcoming versions of his AI chatbot Grok, which is supposed to be a ChatGPT competitor. The CEO said that he plans to train Grok on 100,000 NVIDIA GPUs, and many didn't take this claim seriously, as Musk is, admittedly, known for shooting himself in the foot when it comes to promises and deadlines. However, it seems like he was true to his word this time, as he posted on X that the latest version of xAI's chatbot, Grok 3, should be something special thanks to the NVIDIA GPUs. In today's video, we're going to uncover what this means for Nvidia and Nvidia stock investors, and why Musk is choosing the chipmaker rather than going to a less expensive competitor. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Hans, what you just said a minute ago there, that NVIDIA is no longer just a chip maker, it's all things AI. That has actually captured the attention of regulators around the world. And earlier this week, we got the Reuters report out that actually France is looking NVIDIA is setting potentially facing some antitrust charges there in France. I'm curious to you just how you're assessing that risk from an analyst perspective, and to what extent this could ultimately be a headwind here for the stock.
Yeah, I think that NVIDIA competitors and NVIDIA observers and countries get worried about a company that is grasping or capturing all of this value. So there is a knee-jerk reaction in some cases to stop that. They've already endured the U.S. basically with these restrictions on China. 25% of the business is basically gone, and they're still basically sold out. So it's something to watch, but they are not being predatory in the least, even though prices have been moving up. It's not the price of the chip or the board or the rack that is driving this business. It's the value created by the total cost of ownership. It's a different metric that we in the semiconductor industry are not used to, right? You can double the price of this product and it provides significant TCO, performance per watt, per cubic foot, per dollar advantages that nobody can meet right? It's not like there's another guy that can do it. Maybe AMD captures some share here, but it's a little different. But yes, it's something to monitor. In France, is something that kind of raises eyebrows and so on. But at the moment, I don't think it's going to lead to anything because they're being fair in terms of how they price their products, in my opinion.
It looks like every other AI-focused company is competing to push out more advanced versions of large language models to cater to the growing need for AI chatbots. And one company that recently joined the race is Elon Musk's xAI. xAI's chatbot is called Grok, and the company is currently preparing for Grok 2. However, Musk, in his latest tweet, has started to promote the next-gen Grok 3 model, claiming that it's going to be much larger than its predecessors. And it might not be too surprising to hear that xAI is utilizing 100,000 of NVIDIA's high-end H100 AI GPUs for training its model, which will definitely produce a result that the markets haven't seen yet. There have been rumors that Musk was looking to purchase a large quantity of NVIDIA GPUs for xAI, but now he confirmed them, which is great news for both xAI and NVIDIA. This is because it was rumored that OpenAI's GPT-4 large language model was trained on 40,000 of NVIDIA's A100 AI GPUs, which are relatively outdated compared to the H100s and lesser in quantity as well. Hence, you can imagine the capabilities Grok 3 AI model will hold within itself. Apart from that, Musk previously announced that he plans to acquire NVIDIA's Blackwell B200 AI accelerators for xAI as well, apparently valued at $9 billion, which is a gigantic amount considering the dynamics of the markets. With Grok 3 utilizing 100,000 units of the H100s, the model is supposed to cost around $3 billion in just training, justifying the fact that Musk is maxing out on everything with xAI. It'll be interesting to see the end result, and how xAI will contribute to the AI frenzy. But what do Musk's statements mean for Nvidia and Nvidia stock investors? Let's find out. Hello, everyone, and welcome back to Investocracy.
Our next guest says the Fed could be a caveat to the market, but still thinks the rally will go higher and has just revised his annual price target to 57.51. Let's bring in Keith Fitzgerald, a Fitzgerald Group principal. Keith, it's good to have you. So even with sort of hawkish sounding Powell there.
Even with, and here's the thing, is the market's going to continue to narrow up. It's going to be companies like Nvidia and Tesla and Apple and many of the great tech names we talk about all the time that lead the way. Companies like Nike and Walgreens are going to get left behind. This earnings season is going to be very telling, but still, path of least resistance is higher, Kelly.
And why do you think that is?
What, I think what, that the path is higher or that they're going to get left behind?
Well, both.
Well, there's still a lot of money that needs to go to work, and structurally, we are very identical to two prior periods of significant growth in history, where we had lots of innovation, we had labor challenges, the 1950s and the 1990s. And so if we think about this like a beach party, everybody's just rolling onto the sand, they're starting to break out all the great food, people are smiling, Frisbees are starting to go around, but there's a long way to go before everybody gets sunburned. So it's a nice, good place to be. It doesn't feel like that, but history's often that way.
Elon Musk's large H100 order is amazing news for NVIDIA because it addresses the overblown concerns from investors and analysts over how NVIDIA's growth would look until the release of Blackwell. This is because many have expected slow growth, when that won't be the case as demand for the H100 is still high. Another advantage to NVIDIA is that xAI is going to use Blackwell chips too. Additionally, Musk's other company, Tesla, will also receive its own fair share from the Blackwell GPUs. NVIDIA's cutting-edge GPUs are the most advanced in the market, so Musk seeking them out shouldn't come as a surprise. But there's also the fact that the Tesla CEO is a firm believer in NVIDIA and its CEO Jensen Huang. In fact, Musk replied to a post on X recently that showed a clip from Huang's March interview at the Stanford Graduate School of Business and praised the NVIDIA CEO's leadership style. With many big names in the tech and the investing world still backing NVIDIA up after its pullbacks and firmly believing in Jensen Huang, we think that investors should do the same and take this opportunity to load up on more NVIDIA shares. However, these aren't the only reasons why NVIDIA stock is still a buy, and we're going to get into some more right now. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So, Keith, let's talk about NVIDIA, which you were early and right on and said there's still more room to go and continue to say that. I don't know if you saw last hour, we spoke with Dorona Semiglu over at MIT, who said he thinks the impact of this in terms of the economic impact is actually going to be much smaller than people think. If that's right, yeah, I mean, in measurable terms, that it can replace some tasks, but really not, the bulk of what comprises human economic activity.
I think that's a very interesting observation. I disagree with it, and very respectfully so. This is a lot like saying that talking movie pictures wouldn't replace silent pictures. AI is not just a technology, it's the greatest technology in recorded human history. And I think that every dollar you're spending on it now is returning 5, 6, 7 to the balance sheet. So we're going to be looking at $9, $10, $12, $15 a few years from now. So the question is not so much, is it coming or is it inevitable? The question is, what does that look like? So I would respectfully disagree. I'd push back on that pretty significantly. And I think that that's a very interesting, but not a viewpoint I agree with.
Some people might assume that Nvidia stock is overvalued, but in contrast, we think that the company's best-in-class AI processors demonstrate Nvidia's value. In other words, the products, not the perceptions, that define the company, and this is why we remain super confident in Nvidia stock, as the company's fundamentals remain great, even with the stock pulling back. Worry warts always find excuses to panic sell. It's unfortunate, but don't let the doubters affect your perception of Nvidia's value to shareholders. We're now seeing stories about finding an antidote to Nvidia, as if the company is poisonous, and the Nvidia spell being broken, and this goes to show you just how much some media outlets are trying to play into some people's fears. Remember, Nvidia stock went up consistently from mid-April to mid-June, then it pulled back a little bit. This is normal, as it's not unusual for institutional investors to take profits after a big rally. Nvidia enacted a 10-for-1 stock split, making the company's stock more affordable. Furthermore, Nvidia increased its dividend distributions by 150%. Those are positive signs for the company. Most importantly, the demand for Nvidia's AI-compatible products is intense. In the first quarter of fiscal 2025, Nvidia's data center segment revenue grew by a jaw-dropping 427% year-over-year. Given this growth rate, one might reasonably wonder whether Nvidia stock might actually return to its pre-split price of around $1,200, but we shouldn't get ahead of ourselves, as the stock still needs to return to its prior peak of around $140. Very long-term Nvidia investors can have big goals and, in the meantime, reinvest their dividend distributions. Along the way, there will be commentators seeking to plant doubts in your mind, but you should keep in mind that we could brainstorm and come up with hypothetical maybe scenarios all day long, but none of them would actually add up to a compelling bearish argument against Nvidia stock. There's an old saying, don't fight the tape. To that, we'd like to suggest another principle: don't fight the facts. Nvidia is, in fact, a fast-growing, dividend-paying company with top-quality,